Joe Biden, who according to the majority is about to move to the White House, is a real stock market nightmare. That markets have an overflowing river of liquidity, and if you take it away, they think trading stocks is some kind of casino in which it's impossible to lose. Welcome to the Coin Post. I wouldn't surprise anyone if I told you that the US stock market and the S&P 500 index hit a new all-time high again, and everything suggests this growth will continue. But you also remember they were predicting market collapse in case Biden won the US presidential election, and according to the preliminary results, he does win. There were also many well-founded arguments that if the election results were not accepted, the S&P 500 would go into a 5 to 10% correction. And as you also know, Trump refuses the current outcome. More than that, he sabotages the transfer of power by banning intelligence agencies from passing information on to Biden and his aides. And this is a standard practice in the US when a future president is briefed beforehand. Here's a question then. Why is the stock market still rising? Maybe it's the vaccine? Let's look at the various factors together to see who really drives the rally on the stock market. I'm sure my best YouTube community will support me with likes. Let's start with 100 first. Let's go. The US election is such a hot topic as if they were electing a world president, not for a single country, albeit with the largest economy. Joe Biden, who according to the majority is about to move to the White House, is a real stock market nightmare. That's what they said before the election, because he intended to abolish Donald Trump's tax reform. Corporations will be the first to suffer as they face tax increases. They also promised to raise taxes for the rich, and what's scary, for investment returns. And the biggest nightmare for business is his intention to lift the federal minimum wage to $15 an hour. What we have today is that Biden's probably the next president. And I know many of you want to say this is nonsense and Trump won. But let him win first, and then you can write about it. So, Biden didn't back down on his steps to raise taxes, but the stock market seems to have forgotten about it. What I see now is that a lot of analysts say something like, well, okay, some industries are gonna get hit, but we're gonna move into other assets and we're gonna feel great. So Biden is credited with a bet on green energy, saying that everyone now needs to move in that direction, and they would possibly be right to do so. Now, back to the election. The second negative thing for the markets is Trump's attempt to reverse the election. As I said at the beginning, he's not just urging his supporters not to give up, and is constantly tweeting about that fraud, but he's actually sabotaging the transfer of power, which is already a very troubling wake-up call for the stock market. The question is, why are investors ignoring two important factors that are directly linked to the US election and should have led to the stock price drop? The answer may lie in the fact that, in the first case, the Republicans maintain the majority in the Senate, and thus they won't let Biden raise taxes and extend his other initiatives that could affect business. There's, however, one principal point here. During the Senate by-elections, Democrats can get a majority and then welcome the blue wave. As for Donald Trump, investors' actions can be explained by the belief in the power of the institution of election and government change. I mean, they think Trump's gonna make a lot of noise, but then he's gonna back off, and his Republican colleagues are gonna insist on it. So investors are well aware of what's going on, but they're ignoring these events because they think it's gonna be okay. You have to admit, it's a very optimistic mood. But where it came from, we're gonna discuss at the end of the video. In the meantime, let's figure out how powerful the COVID-19 vaccine is as the S&P 500 growth driver. We already have two vaccines, and I think we're about to have a third one, as even Warren Buffett bought shares in drug companies. By the way, do you follow Pfizer stock? I mean, they were rising only for a week, and today they're lower than before the pump after the announcement of the near-finished vaccine. Just wondering if Moderna shares will do the same. Let's take it to the comments, and now I want to share my thoughts on why I don't believe in the magic growth following the news about defeating the virus. Firstly, even if all vaccines are proven effective, it will take at best a year for the entire population to get vaccinated. And as long as the rate of cases grows, new restrictions will be imposed. By the way, another fear of Biden's rise to power is that he is in favor of a strict quarantine. Secondly, the end of COVID-19 story would be an excuse for countries to stop stimulating economic growth. And we're well aware that markets have an overflowing river of liquidity. And if you take it away, then March 2020 would seem like an insignificant correction. And my third point is that investors now bet on the companies that were simply surviving while everything was closed and banned. But in fact, there is no guarantee that demand for their goods and services will recover quickly and return to the pre-crisis level. For example, people still want to travel again, but many have lost their jobs and savings, so they just don't have the money. Besides, during 2020, the companies got into huge debts too. And if banks stop giving them loans, and they will once the Fed stops the money printing machine, all these companies will go bankrupt. So the vaccine is a good thing, and the coronavirus story should be over, but what are investors so excited about? Why did it cause such a stir? Let's figure it out in the final part of the video. I'm moving on to it right now, while you can help me hit 100 likes below the video. So why is the stock market rising? I risk repeating myself, but because there are computers and smartphones everywhere, and they're easy-to-use applications from brokers. People have always wanted more money, but they used to have conservative instruments like the bank deposit. Now returns are zero or even negative. As for the emerging market currencies, interest on deposits is at a level of official inflation, which is always below the real rate. So it turns out the best thing to do is carry your money to the stock market to get your 5 to 10% a year. And since you can buy and sell shares from your phone, it only speeds up the flow of people. I'm pretty sure most of the new investors that joined the market in the last few years, and especially during the spring-summer rally after the March crash, they think trading stocks is some kind of casino in which it's impossible to lose. This is the initial stage of FOMO, backed up by the fact that market access is as simple as it can be, and the fact there are no other income instruments. Add to this the fact that S&P 500 has been rising since early 2009, and the March collapse was rescued by the Fed's money and almost didn't have any effect. So all these people just see the stocks have been rising for 10 years in a row and think it's gonna be like that forever. It's possible they are right, and we're entering a new era in which printed dollars could cancel financial crises forever. But what happens if they don't? Looking forward to your comments on whether 2021 will be the most profitable year for shareholders, or the biggest shock in history. And that's it for today. Thanks for watching. It's the Coin Post channel. Subscribe and get enlightened.